Welcome to Cycles TV. This session of the Market Cycles Report is intended exclusively to provide information and education to help individuals better understand cycles and the markets. However, this information is not to be construed as professional advice as to the buying and selling of securities. In no event does the host express any opinion with respect to, or make recommendations regarding, the purchase or sale of any particular investment instrument. There is a very high degree of risk involved in trading. Buying or selling decisions are solely within the personal discretion of each individual. And now, enjoy the show. Here is your host.
Welcome to Cycles TV. My name is Lars von Thienen, and once a week, every Monday, same time, same place, we meet here to analyze cycles in the global stock market and specific data sets. Today, I want to review an update and analysis we did often here on the channel. If you are a long-time follower, we can celebrate an anniversary, for example, because we did this 1 year ago. 1 year ago, we analyzed cycles in the Baltic Dry Index. So it's time to review the cycles we analyzed a year ago, the projected outcome, and that's important, what does the cycles in the Baltic Dry Index tell us for today, or the economic conditions and global stock markets we are in. In general, I will make a short primer on this. You are for sure aware of it. The Baltic Dry Index is also known as a leading indicator for economic activity. It's published daily by the Baltic Index Exchange. It's a price series which consolidates 20 shipping routes, as shown here on the chart. So it's a composite for the price charter you need to pay to get shipping routes and to transport your materials for different companies in different international sea routes. So if you measure the price you need to pay for transportation of economic goods, this is also meant as a leading indicator for the economic condition, as demand and supply just defines the price here. So if the price is going up, it looks like we have a huge demand, which means that the underlying economy is very well situated. And the other way around, if we can see decreasing shipping rates, price rates, it could be read as the underlying economic conditions might not be as good as the demand for global shipping is decreasing. So that's the general reading. You will be able to find different information on the Baltic Dry Index out there. I'm sure you are aware of this. So here's just a short reading. The change in the Baltic Dry Index can give investors insight into global supply and demand. Many consider a rising or contracting index to be a leading indicator of future economic growth, as seen here. But do your own research. I think you will be aware of that. So this is very interesting for cycle analysis. So the raw index is not as interesting as I think you can't derive any consequences out of the raw data set of the Baltic Dry Index. But if we are able to find dominant cycles in this Baltic Dry Index, this might help us to identify important points in time as leading information when we see already extracting or expanding or contracting economic situations. So therefore, it's always interesting to see, is there a cycle which at least can be identified via cycle analysis, which might help us in the interpretation. So I would not put too much attention on the raw data. Let's see what the cycles tell us in the Baltic Dry Index. So that's the purpose. And I'm always interested in finding data sets which are not showing us the raw information. So we are interested in what the economy, what the global stock market might head into. But instead of analyzing the raw stock market data, we analyze leading other data sets which could give us a clue on that. And that's sentiment data, and that's also the Baltic Dry Index as shipping rates in the international market. So we did it a year ago. If you are new to this channel, please let me remind you that we did review the Baltic Dry Index. You will find it in the archives here on our Cycles TV channel. It was the 20th September, at least a year ago, 20 September. We reviewed the cycles in the Baltic Dry Index. And I would recommend, if you have not watched it, please start there or at least review this session. Because what was very, very interesting at this point in time, and you will find the workbook and the cycle study in our ideas section. So if we now switch to the cycle analysis, you might be aware of that at the foundation, we also have a public area, which is called here the ideas area, where members and also myself from time to time can publish public ideas on cycle analysis. Maybe it will become the social place to discuss cycle analysis in the stock market. I just can highlight or recommend that everyone might have a look there. There are very interesting cycle studies posted by members out of the foundation. But today I will just draw your attention to the idea I published a year ago. It's still there, so you're invited to review this idea, and that's the starting point. So let's open this idea and let's start our cycle analysis from there. So in September, let's start here. In September last year, we analyzed the cycles on the Baltic Dry Index, and we identified this dominant cycle with a length of 243 days, as we saw it here in the spectrum, as one clear peak, as a dominant cycle, which has been used to do a prediction. I think we always use standard procedure here. So let's look out for the most prominent peak in the spectrum, clear separation to the left, to the right, high amplitude in regards to the other cycles here, large triangle, green triangle. So all conditions are met to use this cycle here for projection. I did a long-term review in the video a year ago, and that's the reason I brought it up here in September last year. I already mentioned that this could be a signal of a peak for economic conditions. So the cycle for the Baltic Dry Index peaked here back in September last year. From leading indicator perspective, I started from September and October to publish the warning of the stock market going down, and this was one indicator leading to that. So, but that's not all. If you now, after the fact, see, we know it peaked at this point in time. Let's review what the Baltic Dry Index did afterwards. So the light blue data is the out of sample result after we did the projection a year ago. Not only did it project the top as we did this video and I published the idea, it also projected back in September the possible bottom for the shipping rates to show up in February. And you can see from the light blue data, this projection was, it could not be better in regards to the top and the bottom. And if you are in this market here, so if you need to hedge against shipping rates, so if you are in this economic market here trading, so this is anyhow already an important cyclic information which can help you adjust the risk management if you are on the shipping business here and need to book different rates here. But that's not the main purpose. So I just want to recall how perfect this cycle projection was. For today, it's more important where we are in this cycle and what does it mean now, looking even more ahead into the future. So first of all, we must update this analysis. So one lessons learned from an education perspective is never use a static projection as we did here. So this projection is 1 year old. From a theoretical perspective, you could plot this cycle even further into the future with the next turning points. But I would never recommend to move further into the future for one projection than just 1 or 2 turning points from any projection you're doing, because cycles are not static. Cycles have an underlying change in length, amplitude, and phase. So due to the principle of variation, you will not see this static cycle after 1 year time has progressed into the future. So that's the reason never use a cycle projection going further into the future than 1 or 2 turning points. I mean, this is what we've done. So now we are exactly at this point here. So we have passed and we predicted the low. So the question is, what's up now in the Baltic Dry Index, and what would be the reading for our interpretation on the global stock markets here. Okay, so therefore the data set is already updated until September. So I think Friday last week we have the latest data here. So we just need to bring the analysis to the current point in time. So I will therefore adjust the endpoint of this analysis here, bring it so just click this arrow here in the cycle analyzer if you want to repeat this as a member, put this to the current point in time, and refresh the cycle analysis. So now all data, or at least this is a long-term analysis, all data, including today, so the last year has also now been taken into account. We can have a look at the spectrum for this point in time, and we still see that it just changed slightly, but we have, I think, over 2,000 data points. So this is a long-term analysis. So it changed slightly from the length, 244. For sure, the phase and the amplitude also slightly changed. But this is good to go. So therefore, let's still use this cycle. So this is, and you see where we are today. So there are now different readings which are important in this point at this point in time here. First of all, the cycle peaked at 11th of August, and we have passed the cycle peak already from the static projection of this cycle here. This has been aligned more to the historical fit in this data set. So I will also update the analysis with a shorter amount of time. So here we see we're going back to 2012. So this is taking into account over 10 years of daily data, which is for current projection too much. But to analyze if there is a key dominant cycle over this long period, that's important. So if we have this clear peak, which is really outstanding in the spectrum, we have this cycle here, which is still dominant. If you would see different peaks in the spectrum with the similar high, so then there's not one single cycle which would become clear from the long-term perspective, which is more often the case. But here on the Baltic Dry Index, there's clearly no interpretation. There is one key dominant cycle which stands out in the long-term cycle analysis. So, therefore, we always need to take into account now different scenarios which are important here, and we need to fine-tune the analysis. First of all, the cycle top turned already. So we have passed the theoretical top of this cycle. The real market, or the real Baltic Dry Index rates, topped already end of May. So, but as you also see here in this top, you can't read it day by day. And therefore, I mean, the top in the cycle occurred in August, and then the real top in the shipping rates in October. So there could be a left translation of this cycle here. So maybe we have seen the raw peak anyhow here. But we are not here in predicting the exact tops and bottoms of the Baltic Dry Index. The more important reading here is that, first of all, the raw index topped in May, and the key dominant cycle is pointing down. So both readings, raw index or using the long-term dominant cycle, are pointing down, which seems to indicate that the economy is slowing down. And maybe the slowdown started already end of May. So what we're seeing here. So the last rally, which we've seen from May to August, is just lagging as the key and economic indicators show us from the Baltic Dry Index that we see slowing, at least slowing economies based on the current shipping rates. And I told you back here in August last year that this is a really important indicator. We could see a major top in the markets, which happened then 2-3 months later. But this is a leading indicator. Don't map it on the stock market. Yeah, this is, we don't know exactly what's the leading time of this indicator. But similar to what happened last year, September, October, where the Baltic Dry Index topped, we now have the same situation from this dominant cycle here. Yeah, so the raw values dropped already, and the dominant cycle is topping. So from this reading, I hope the message is clear, and it just confirms what I did here with the inverted yield curve, what I showed you 2 weeks ago on weekly daily sentiment cycles. This is now the Baltic Dry Index added to the mix, and it gives you the same reading here, which is clear. And if we now drill down into a more detailed analysis and reading, this is the way to do it. So first of all, let's not do an analysis with over 2,000 data points. Let's just use the more or less current data set. So therefore, I just need to drill down to my data sets, Baltic Dry Index. So here we go. And as always recommended, use more or less the last 3 years, around 800 to 900 data points. I often repeated the procedure and the reasoning for that. So that's the starting point for any analysis. While doing that, we see the peak in the spectrum here, which is showing up at 250 days. So that's, yeah, if you add the all historical data, you get to the length of 244. But the current cycle, and that's now the interesting point, that's the principle of variation. We can now measure the variation of this cycle. So the current length in the current data set is around 250 and not 245, with different phase also. In addition, we might see 2 additional cycles which could help us. By the way, we discussed this last week. This is a very clear separation in the spectrum here. Yeah, if you remember last week's session on Monday in the Bitcoin, I explained often what is a separation in the spectrum, and this is the ideal separation I really want to see, when the separation goes nearly down to the bottom of the spectrum here and then goes up again. This is a very nice separation of cycles in the spectrum. Yeah, in the crypto spectrum, we have seen it's just these valleys here on top and never going down. So just if you're coming from last week. So this is a very nice separation here of this cycle, which gives us this reading here, just the confirmation that the long-term cycle is still there. And then the next one, you see the offset line here. So the next 2 cycles, you could use this one and this one here, then to fine-tune the composite model. So these ones are in regards to amplitude, they are too small. There is maybe a cycle here, but I would always start with the longer term cycles and then drill down and add shorter term cycles to the mix to see how a composite and more strong cycles are important. But let's do our standard procedure and start with this cycle first here. So 250, more or less similar reading than the in 250, same reading as the 243 from the long-term analysis. So there's no change or there's no different picture here if we just shorten the analysis time frame. So same story, dominant cycle, peaked already. So we should see a slowdown in prices in the Baltic Dry Index. And it seems like we have a left translation. Anyhow, prices are moving down. Interpretation for the economy is clear, I think. So now what could be used to more fine-tune this analysis is bring in the shorter term cycles. So bringing in the shorter term cycles, and I go now from more longer cycles to shorter cycles. These two ones here, 172 and 141, ignoring a little bit strengths and battles for a moment, just coming from the from the timing perspective here. I mean, this is still green, that's okay. This could be discussed, but let's start with this one. Here it's a green triangle 172. It's this one here, and that's what what should we look for if we start with a dominant cycle? And by the way, I see your question already. Maybe let's bring in this question here, Edward. I've noticed that you're moving away from using a dominant cycle in the favor of configured composite cycles. So therefore, I'm not moving away from this analysis, because I always start with the most important one shown here in the mix, and that's based on strength and Bartels. So you could argue that at least from the numbers, it's this. Give me a second. From the theoretical reading, and that's maybe then a good learning point here. Let's start here. It might be in regards to strength, the cycle with a length of 53 or 45. I explained often the difference here, why there might be a difference. But even if you could argue from the strength perspective, that's the dominant cycle, the Bartels value, the Bartels value, I can't see it here, but the Bartels value is shown here with 30 is much too low. So this one from a Bartels score is not what I'm looking for. And it's a very, very small cycle. So, and it's not clearly separated in the spectrum. So this one, that's always why I use the visual shape of the spectrum. This is the standard procedure I'm teaching here again and again. This is clearly the most dominant cycle coming from right to left from the spectrum here. I think there should be no discussion on that. That's always the starting point. So Edward, I'm not moving away from this analysis. That's exactly the starting point. I would then just try to bring in composite models to more fine-tune that analysis. Okay, so it's no difference here. Start with the dominant cycle, which is the key cycle, which could be seen in the spectrum. Okay, but just as I've seen this question directly related to that. So that's the most dominant cycle. And we know from history what the dominant cycle is. That's the second indication how to identify the dominant cycle. That's also what I often try to explain. You need to understand the rhythm of the data set also from the historical analysis. So just because a cycle shows up in the list, it does not mean it is really important. It might just pop up there. If it has never shown up in the historical analysis, I would not use this for any projection. With a cycle with a length of 250, we know it is important since the analysis we did last year, and it's still, the cycle is still there in the spectrum, and it's the most. So I think that's the starting point. Use the dominant cycle 250. So now for fine-tuning, and that's the beauty of a composite cycle model, to more fine-tune the turns. Also keep in mind, we are not projecting absolute price targets here. It's about the timing of these cycles. So the next cycle from the spectrum separation here are these two ones here. And I would always drill down from the longer ones, but we could use different procedures here. So that's the reason why I want to bring in the cycle with a length of 172 and 141. And now please observe what happens, because what I'm interested in when adding these smaller cycles, so having the dominant one and now adding the smaller cycles here. Sorry, this is the longer one from the historical perspective. I want to monitor how the change of the turns now impacts the projection. So this is the, and we can mark that, that's the current timing point we have here just using this cycle. now adding the 172 to the mix, you see how that we get a left translation of the projected top here, more to this timing here. And if we add the second cycle, we have another left translation for the top. Yeah, so that's just what I'm interested in. So, and adding these two shorter time cycles now give us a clear confirmation that it looks like we have now a correlation between what happened in the raw data series and our cycle projection. So it did not impact, and that's interesting, it did not really impact the topping here, but it fine-tuned a little bit more our timing here. And now I said we could see a left translation in between the raw data and the longer term cycles, and the shorter term cycles from the spectrum confirm the left translation of the dominant cycle here. If we talk about turning points, it would have been a different story if this top would have moved more into the future, but it has not. It moved more into the past where the raw turns happened. I would not pay too much attention to these smaller bumps here in the composite, because these are the key turns here from the toppings, and these are more or less the key turns from the bottoming area, which is then here. So and the reading of, and I'm now just looking at this top here and here, is indicating that the shipping rates go down as projected by the cycle composite. The 205 nominal cycle, which is an historically important cycle in the Baltic Dry Index, it's still there. We can explain the left translation. It has now turned in May, June, it turned, which again gives us a leading, don't map it exactly to the global stock market, a leading indication that it looks like economy, or at least the underlying companies which rely on the global shipping rates, the demand goes down, economy slows down, which should then translate into the economic profits and balance sheets of the companies. Okay. So you can now add shorter term cycles to the mix, but that's the way how to continue, and never start with too much short-term cycles in the way. And that's what I said. I think there's also the question using the 52 or 53. I explained you the difference, why you see here in the lower left the 54 and 53 here in our current spectrum. You see, if I activate this and deactivate this, what happens to the timing? It does not change. So I think the 53-day cycle is not as important alone. You see, if you just have a close look into this period here, and if I activate and deactivate it, the timing does not change. So the top still confirmed. More important are here the two longer term cycles to point it. And if you just use the 172, this really looks like in sync. Maybe this will become more prominent. Very high Bartle score here, but not as clear separation. So the 172, which is this peak here in the spectrum, also green triangle, good Bartle score, strength not as good, but just using these two cycles here from the spectrum would give you a perfect, almost perfect projection here. And then throw in the shorter term cycles like the 53, but it won't give you a different reading. Okay, so that's why I wanted to explain a little bit how to use composite cycles here. That's the reading of the Baltic Dry Index. That's the key cycle now using the Baltic Dry Index here for projecting. So I hope the message is clear for today's roadmap. I think it's important to go back 1 year. I mean, wow, we are here for over a year now. We did the Baltic Dry Index September last year. See how nicely it helped us to get a leading clue what the markets will do. We have the same topping projection in the Baltic Dry Index, let's say for this summer, which is a leading indicator for the stock market, what we should expect there. So finally, not good news for the stock markets, just using the Baltic Dry Index. Add this to the mix of your daily analysis of the global stock markets. That's what cycle analysis is for. I hope it helped you again a little bit to improve your knowledge on cycle analysis. And I try to bring in argumentation, which cycle to use, which cycle not to use, and the reasoning for that while doing real data, real analysis. I hope that's more interesting than any other analysis. Okay, I tried to bring in your questions right in sync with my presentation, so it's not easy for me to have a look at the questions and the live stream, but I think I tried to do my best, Sergey, Edward, to discuss your live questions here. Sure, you can use the same principle on different data sets in regards to the same procedure. So use other transportation indices, check if the cycles speak a similar language here. But in general, I would say for today, let's keep it as is. This was the Baltic Dry Index for today with a clear reading. Take it as education on your cycle analysis knowledge. And please like, subscribe, leave me a comment. I will be here next week, Monday. Same time, same place. Hope to see you here. Thanks for joining today. Have a nice evening. Bye.